Chapter 10. Dividend and Interest. Question 7. Answer the following. 8 marks each. 1. Define dividend, and explain its features. Answer. Definition of dividend. The word dividend is derived from the Latin word dividendum, which means to be divided. Dividend is that portion of the profits of the company which is distributed to its shareholders. According to the Supreme Court of India, in case of going concern, dividend means portion of the profits of the company which is allotted to the holders of the shares in the company. Features of dividend. 1. Portion of profit. Dividend is that portion of profits of the company which is paid to its shareholders. 2. Out of the profits. Dividend is paid only out of the profits earned by the company in the current year and previous years. It can also be paid out of capital profits, subject to certain conditions. 3. Unconditional. Company cannot attach any condition while paying dividend to the shareholders. 4. Paid to shareholders only. Company can pay dividend only to the shareholders, namely preference shareholders and equity shareholders. 5. Equity shares with differential rights as to dividend. In case the company has issued equity shares with differential rights as to dividend, dividend will be paid to these shareholders as per the terms of issue of such shares. 6. Cannot be paid out of capital. Company cannot pay dividend out of capital. 7. Recommendation of Board of Directors. Shareholders can declare the dividend in annual general meeting only when it is recommended by the Board of Directors of the company. 8. Declaration of dividend. The rate of dividend recommended by the Board of Directors is approved and declared by the shareholders in the annual general meeting by passing a resolution. 9. No dividend for previous year. Company cannot declare dividend for any previous year for which annual accounts have already been approved in the annual general meeting. 10. Dividend once declared cannot be revoked. Once the shareholders approve and declare the rate of dividend in the annual general meeting, it becomes a debt and cannot be revoked by the Board of Directors. 11. Includes interim dividend. As per Companies Act 2013, dividend includes interim dividend. Interim dividend is declared and paid between 2 annual general meetings. 12. Payment in cash. Companies must pay dividend in cash and not in kind. 13. Calculated on paid-up value of shares. Dividend is to be paid only on paid-up value of shares. 14. No dividend on calls in advance. No dividend can be paid by a company on advance payment of calls made by the shareholders. 2. What is interest? Explain its features. Answer. Meaning of interest. Interest is the price paid for the use of others' money for a certain period of time. It is paid by the borrower to the lender. Therefore, it is the cost for the borrower and income for the lender. The company borrows money from debenture holders, bond holders, depositors, banks, financial institutions, etc., for business purpose and pays interest to them as per agreed terms. Features of interest. 1. Price for use of capital. Interest is the price or consideration for the use of others' capital fund for a certain period of time. 2. Directly related to risk. Interest and risk have direct relationship. If there is high degree of risk, the rate of interest will also be higher. 3. Rate of interest. The rate of interest is expressed as an annual percentage of the principal amount. For example, interest 10% per annum on borrowed amount of rupees 1 lakh means rupees 10,000 annually. 4. Factors determining interest. Various factors, like money supply, fiscal policy of the government, rate of inflation, volume of borrowings, etc., determine the rate of interest. 5. Charge against profit. Company has to pay interest, even if it does not earn any profit. Therefore, interest is considered as a charge against the profit of the company. 6. Fixed rate. Generally, the rate of interest is fixed and predetermined at the time of borrowing. 3. Discuss legal provisions for declaration of dividend. Answer. Dividend is that portion of the profits of the company which is distributed to its shareholders. Following are the legal provisions for declaration of dividend. 1. Board meeting. The rate of dividend is first recommended by the board of directors and then declared by the shareholders in their annual general meeting. Therefore, board meetings should be called to pass the following resolutions. A. Rate of dividend and total amount of dividend to be paid. B. Book closure date for payment of dividend. C. Bank with which a separate account should be opened for depositing the dividend amount. D. Date of annual general meeting. 2. Shareholders' approval. A. Dividend recommended by the board of directors is approved by the shareholders in the annual general meeting by passing an ordinary resolution. B. Shareholders shall not declare dividend exceeding the rate recommended by the board. However, they may reduce the rate of dividend as recommended by the board. C. Once a company has declared dividend for a financial year at an annual general meeting, it cannot be revoked, and a further dividend cannot be declared in respect of the same year at a subsequent general meeting. 3. Separate bank account. As per the resolution passed at the board meeting, the company must open a separate bank account, called as dividend account, in a scheduled bank, and deposit in it the total dividend amount within 5 days of its declaration. 4. Listed company. If the company's shares are listed on the stock exchange, it has to fulfill additional requirements as follows. A. It has to notify the date of the board meeting at which recommendation of dividend is to be considered to the stock exchange where company's securities are listed. B. It has to intimate stock exchange immediately after declaration of dividend. C. It has to give notice of book closure to the stock exchange at least 7 working days in advance. D. It must close the register of members and transfer register during book closure. E. It must use electronic mode of payment like National Electronic Funds Transfer, NEFT, or Electronic Clearing Services, ECS, as approved by the RBI. F. Listed companies are required to express the dividend on per share basis only. 5. Prohibition to pay dividend. A. If the company has failed to pay any interest on deposit or repayment of deposit, it cannot declare any dividend on its equity shares. B. The company cannot declare dividend if it has defaulted on redemption of preference shares, redemption of debentures, payment of interest on debentures, payment of interest to financial institutions, etc. 4. Explain interim dividend. Answer. Meaning of interim dividend. The dividend, which is declared by the board of directors between 2 annual general meetings of the company, is called interim dividend. It is paid before the finalization of annual accounts, that is, in the middle of the accounting year. Board of directors have to take opinion of the company's auditors before declaring interim dividend. Dividend includes interim dividend, and hence, entire provisions related to declaration of dividend shall be applicable to interim dividend also. Features of interim dividend. 1. Power to declare. The board of directors of the company has the power to declare interim dividend. 2. Part of final dividend. Interim dividend is only on account payment of the whole dividend for the year. Hence, it is a part of final dividend. 3. Provision for full year depreciation. Before declaring interim dividend, company should provide depreciation on its assets for the full year and not proportionately. 4. No payment out of free reserves. Company cannot utilize free reserves for the payment of interim dividend. 5. Authorization by Articles of Association. Articles of Association of the company must authorize the board of director for declaration of interim dividend. 6. Board resolution. A resolution has to be passed in the board meeting for declaration of interim dividend. 7. Separate bank account. Company has to open a separate bank account in a scheduled bank and transfer the entire amount of interim dividend in it within 5 days of its declaration. 8. Time limit for payment. Interim dividend, so declared, must be paid within 30 days of its declaration. 9. Unpaid or unclaimed interim dividend. Any unpaid or unclaimed interim dividend amount should be transferred to unpaid dividend account within 7 days from the date of expiry of the 30 days period provided for payment of dividend, that is, within 37 days of its declaration. 10. Transfer to IEPF. If any amount remains unpaid or unclaimed in the unpaid dividend account for 7 years, the same should be transferred to IEPF along with interest.